Hi, everyone, and welcome to UBS Trending. I'm your host, Anthony Pastori. Thank you for joining us. Natural resources are all around us, and with so many geopolitical events and weather anomalies, among other things, the question is, how might that impact those actual natural resources that we're going to talk about today? Also, on the investment side, are there any good opportunities out there? Well, joining me now is Al Chu, research analyst from Newton Investment Management. Al, great to see you. This topic is so fascinating to me because when we're talking about natural resources, we're not just talking about one thing, energy, for example. We're also talking about agriculture. We're talking about many other elements. And I love the way you talk about it. I'm excited to get into this conversation with you today. So first of all, good to have you here. Thanks for joining us.
Thank you for having me. Pleasure to be here.
Let me ask you, so I do want to start with energy. That really is one of the biggest topics of the day. We've got a lot going on between climate change initiatives, green initiatives that are happening out there, particularly with what's in the Inflation Reduction Act here in the U.S. But we still have the Ukraine war and the conflict between Russia and Ukraine, which is causing some issues with supply. What's the state of the energy markets today as you see it?
Sure. No, that's a great question. You know, it's interesting right now because we're seeing probably one of the biggest dislocation between the fundamental physical market and what we're seeing in the financial market. If we look across energy, oil, products, natural gas, we're looking at, pretty much record low inventories across the board. I like to say that my job is fairly simplistic. I look at supply and I look at demand. Demand we've normalized from COVID, right? Flight data, traffic, foot traffic, everything is pretty much back. Yet on the supply side, we continue to be hindered on production. The price signals are being sent, but it's not being allowed to be received by the producers. And I think that's one of the things that is somewhat unique in this cycle, because typically in commodities is that high prices is the cure for high prices. This time around, though, the physical markets are sending, guys, we need more natural gas, we need more oil. But the producers, whether it's because of ESG or energy transitions, that price signal is not being relayed into a production trend. I think that's going to exacerbate. So the tale of two cities I'm referring to is that on one hand, we're looking at fairly tight, record tightness on many examples across the board. Yet on the financial market, we're pricing in, well, there's a recession coming, or if we're not in one already, there's China with their lockdowns, and there's just general fear, in the sentiment across the market, and it's not being reflected fully into the financial prices. So I think this actually spells one of the most attractive investment opportunities, right? My job is basically mispriced assets, and right now, when I look at commodities, pretty much across the board, it's mispriced, both on a cyclical and a secular perspective.
When you say mispriced, you're saying that according to what you're seeing historically, that we're in sort of in a mispriced environment right now?
Absolutely. From my fundamental view is that, right now we should be sending signals, right? Plant more fields, build a refiner, let's drill more oil well. But the narrative that the street is having, or investors and popular narrative is that, oh, well, in 20 years, we're all going to be driving EVs, so we don't need oil anymore, right? Let's just, we can sell all of our oil companies, and the oil companies, they got that message, and they're giving back record dividends and buybacks and rediverting capex into more, renewables, and not investing back into a long duration refiner or an oil field. And why should they, right? Because the market share is going away. But the reality is, for us to actually tilt to a full EV fleet, you need an enormous amount of copper or aluminum, lithium to actually build out that infrastructure. And that's going to take decades to do. And the longer that actually stretches out, which it looks like it's going to get increasingly pushed to the right and higher, it actually spells a very, very profitable case for a traditional hydrocarbon. So when I look across the commodities world, I look at it twofold, right? One is the disruption. Well, what's being disrupted is hydrocarbon. But contrary to popular belief, it's not lower oil prices the more it gets disrupted. The more we displace oil, the higher oil prices go. And we've seen that in natural gas. We've seen that in coal. We've seen that in uranium. That's across the board. And two is actually the investment opportunities also. Well, if we want to get to net zero, we need a lot more copper. We need a lot more aluminum. We need a lot more with the bridge fuels. So it spells out a great investment case across the board.
Right, you definitely need those natural resources that are available out there to run the machines to make all of this possible.
Absolutely.
Right, exactly. And which takes me to with a follow-up question to you. And you think about the future of energy, and you're sort of alluding to it already. And let's be clear. We know, obviously, you mentioned EVs. We want all EV cars in the next 20, 25 years. We have a mandate in the U.S. You know, there's the Paris Accord. There's all kinds of initiatives globally that say we need to be more climate friendly. So what does the future of the energy market look like, given what we know is ahead of us right now?
I think it's if the term is, it's evolution, not revolution, right? As we've seen in what happened in Germany over the past 10 years, right? As they, rushed towards renewable and closing down their nuclear fleet, is that, the transition wasn't one-to-one. You can't close down 1 megawatt of nuclear capacity and put on 1 megawatt. You actually have to put on several times the amount of capacity, right? If you rush too fast into it, you actually cause economic and oftentimes humanitarian issues later on, right? Is that you need to be well planned out and you need to run dual paths. And I think that's increasingly being understood by the market, is that this will take multi years, honestly multiple decades, for us to go into energy transition. It's going to be a lot more expensive than we think, and we cannot cast aside the traditional industries, right? Whether it's hydrocarbon or the metals and mining, right? You need basically all hands on deck. And that's not to discount technology. You need new technology. Interesting conversations I was having earlier was about the upcoming energy crisis in agriculture, right? Because it is a form of energy. Will we need vertical farming? Oh, absolutely. You need vertical farming. You need better synthetic fertilizers. You need just better metrics on everything we do. It's not going to be one answer. There's no one solution. So it's going to be numerous strategies going into how do we make the transition easier.
Yeah, and that's because that's one of the biggest questions that I think a lot of people are asking now. The conflict in Ukraine has been going on for many, many months. The human toll, of course, is something that we can only fathom by not being on the ground there. But there's also the possibility that exports, like wheat, for example, which Ukraine is the fourth largest exporter of wheat to the world. As of 2021-2022 season, I think they released 24 million metric tons of wheat to the world. And there's a possibility that that may not happen because of the restrictions and how Russia's blocking them. But there are also climate issues. There's droughts, there's fires, all kinds of things that are kind of putting a little bit of worry that people are not going to get the food and the ingredients they need to make food. So what does that mean about potential food shortages and wheat and corn and those types of commodities?
No, that's a great question, because that's actually, we're strangely complacent about the single most important commodity in our lives, which is not energy, it's not oil, it's not natural gas. The single most important commodity in our lives is food. It's something that we have to use every day. There's no, there's no way of getting around it. There's no substitution effect.
Right.
If we look at it increasingly, structurally, we're going to go from, in the next 20, 30 years, 8 billion to 10 billion people. And that's from the United Nations, right? That's a fairly accepted number. On the supply side, though, if you think about between water scarcity and volatility, climate change, changing planting and growing patterns globally, and increasing food nationalism. To your point on Ukraine being, the fourth largest wheat producer, the global wheat export market, around 90% of it is controlled by 7 producing countries. Right,
it's an incredible number to really think about.
Right, it is a if you think about the supply chain system, right? If the have and have-nots, if one country run into issues like Russia, Ukraine, or run into bad weather or a rail strike, if in the U.S., that has knockdown effect basically globally. There's numerous countries that depend on cheap and stable food. So if you look at the food and agriculture availability picture over the past 7, 8 decades, I mean, food as a percentage of CPI or PCE has gone down pretty steadily, gone from mid-teens to high single digits over the past 70 years. Yet if we start looking at it with the global population growth, with increasingly harder growing conditions across the board and food nationalism, the next 20 years, it's arguably going to look a lot different from the past 70 years. And that's something we have to prepare ourselves and our investors for.
Right.
Right. So.
I mean, certainly innovation is key to solving this potential crisis, because as we know, this is not something that's an anomaly. This could be, if it's climate, it could be something that is going to change the way we have to farm for the rest of our lives and our children's lives and their children's lives. But, with conflicts and geopolitical issues, they will always, unfortunately, come up and could impact different areas of the market. And you said it perfectly, Al. I think we forget that the biggest commodity that we need is food. Without it, we're dead in the water.
It's the ultimate energy market.
Right.
Right.
Incredible.
Yeah.
So within your coverage universe, and you cover natural resources, which is a pretty big, coverage universe itself. Where are the investment opportunities out there today, given what we talked about today between energy, between agriculture, and the concerns that are ahead of us? Inflation is still a huge factor, which we barely even scratch the surface on today, because that's a whole other discussion. Where do you see opportunities for investors right now? Where do you invest yourself when it comes to your own portfolio?
Sure. Our portfolio is pretty unique, right? We're focused very much so on alpha-driven, both on the commodities side and on the equities. Picking the right commodity and picking the right stocks. The saying for commodities investors is that there's always a bull and bear market going on somewhere, and that is actually very, very true. Looking at last year, natural gas more than doubled over last year, while iron ore went down almost 50%, because it's very idiosyncratic drivers. One is weather, pipelines. The other one was Chinese new property market. So there's always a huge amount of alpha generation. If we start looking across the short term and the long term, where the puck is going or where the football is going, if you will, energy still for the next several years it's going to be extremely tight, right? If we look at the supply response, there's just not enough supply response. Even in the example I used on a refiner, it takes 10 plus years to build a refiner, tens of billions of dollars. So even if we send the right price signal now and start moving the the supply signal, the supply response, it will still take us years to get that done. Typical commodity cycles, they don't end in 2 years. It's multiple years. Then we start looking at some of the more idiosyncratic. Food, I think, is a huge theme over the next short, mid, long run. Is that it's hard to imagine a scenario where agriculture is not going to be a big issue or investment opportunity. Then there's some smaller ones. Uranium, it's one of those where it doesn't really matter what the rate policies are or what China's doing. It's a very story specific what is happening to uranium. And as we see some of the developments in natural gas world and power stacks, is that it spells out fairly bullish for that sector. So there's always going to be attractive opportunities. Metals and mining is another one. Right now, you have a lot of concerns about recession, about Chinese demand because of their lockdown policy. But if we look at the long term, energy transition cannot happen unless we have enough copper. It cannot happen unless we have enough lithium, enough steel or cement or nickel or cobalt, right? So right now, the price signals have to be sent. You need higher and higher price signals. The mining companies have to invest the capex. So when we start thinking about that whole ecosystem or that supply chain, right? One is that prices have to be higher when we think about what's being disrupted. And then we also think about the enablers, right? The capex companies. Well, if we're going to have to start building more mines, do we need more equipment? Do we need the engineering companies to actually go in there? So when we try to think very holistically, understanding it both from the top down and the bottoms up. And I think that's the most powerful combination that we can think of. Yeah.
And it's as you said, it's also about the capital expenditures. It's also about the infrastructure side of the business. There's, like you said, engineering companies and other companies that have to build the materials that go and drill for the oil or mine for various elements, and then of course the farming equipment. I mean, you've got to actually have the equipment to pull the wheat out of the ground and then refine it and turn it into whatever it is that it's going to become.
Absolutely.
So it's a really holistic picture. I know we only scratch the surface on the resources themselves, but it's really fascinating. It's an interesting topic.
Economic rent tends to transfer throughout the cycle, so it's you having a broader outlook, having the breadth and the depth. With our research team and portfolio management team, I think really helps, and I think that's that really helps the alpha generation.
Al, thank you very much. Come back and visit us soon.
No, please.
There's no shortage of things to talk about in this arena. Good to see you.
Great, thank you for your time.
Al Chu from Newton Investments. And for more information, please visit our website at UBS, ubs.com/views. Lots of content from us and from our Chief Investment Office specifically, where they're talking about topics just like this. And of course, if you have any questions, make sure to reach out to your financial advisor, and make sure to follow us on social media. We've got content on LinkedIn, Facebook, Instagram, and Twitter, plus all of our past UBS Trending episodes are available on demand. Until next time, I'm Anthony Pastore. Have a great day, everybody, and remember to keep your eyes on what's trending. We'll see you soon.